course, if you're using World Trade for this analysis, and in case you don't know the broker called World Trade, you can check the description. I'm leaving a link there for you to register with them. And remember, they don't just offer synthetics, they offer normal Forex market too. Alright, marking the structures. Alright, here's our previous level. Where we marked. Now, the market is currently giving us change of structure on the bearish. I remember we look forward to always going along with the current change of structure as day traders. I believe that the market has been moving in this level. Now, what you want to see is the market giving us continuation of this pattern for us to continue on the bearish aspect. Is unable to break above this, breaking below this, unable to break above this, then we go short on that. So this is what I'll be looking forward to do. So if I can see something like this, then I'll be going short on FxVol 20. So go to the next one, which is going to be break 600. Actually, someone actually just a comment that we should check switch 600, break 600 and PainX 600. So let's check break 600. Alright. So here is break 600. So going to the H4. It's currently bearish. So we are looking for just bearish trade. Breaking below this and getting rejected. Now waiting for the market to close bearish. After this 15 minutes candlestick closes, wait for the next 15 minutes candlestick to close. Once we can get two 15 minutes candlestick closing below this level, we go short on this. Remember, I said two 15 minutes candlesticks, so that means getting to somewhere around here. Stop loss is going to be here, then take profits. Minimum if it's 1:2 is to what they show. Remember, if this candlestick closes bearish, wait for the next candlestick to close bearish. This is 57, so that means the first candlestick in after 9 o'clock is the 15 minutes. If it closes bearish, then we go short on this. Stop loss is going to be below above this level right here, this rejection. Then I'll take profits minimum of 1:2 weeks to reward ratio. So that's that for book 600. So go to the next one, which is going to be gain, and we are using gain 400. The 400 is already very bearish. Nothing much to say on the high time frame. Just for us to just wait for change of structure on the bearish pattern. Because we can't really go short on this. If you're going short on that means our stop loss is going to be above here, which is definitely too wide. So we just have to wait for retracement on and gain 400. So going to the next one, we're going to be pain as we are seizing 400. Remember, you can always drop a comment in the comment section. If this is your first time coming across my video, please do well to make sure you hit the subscribe button and don't forget the bell icon beside. And if you're watching this on Facebook or TikTok, please hit the follow button. And you can also do well to share with your colleagues if you might need this information. Remember, this is not me telling you to place trades exactly how I do it. You can just compare this with your own trade, and if it goes well with your analysis, fine. If it doesn't, always remember not to risk more than you can afford to lose. Alright, and this what's it called? PainX 400. Now you can see it has been bullish for a long time. Now getting rejected here, getting rejected again, and then you just have to go straight to the 15-minute chart to see. You can see change of structure on the bullish aspect of it. Alright. Now I'm looking for bullish trades. I'm looking for bullish trade because let's say market move from here down here, book above it, came down here, book above it, came down here. You can see it now was not able to break, not able to break. You can see it. So this is now the market giving us a slight change of structures. So the only time we're looking forward to a buy trade is if the market now happens to break above this recent high, this high we see right here. If it's able to break above this high, that is when we're looking forward to a trade. Now looking at this, I can see the market is forming like something like an arc. If you should take just the eyes starting from here, you can see something like an arc being formed. I'm sure you can see that already. So this is now like a likely change of pattern. So let's see if the market is now able to break below. If the market is able to break below this level, just as doing already, break below it, it creates, they're unable to break above this level, then we go short on that. So that's what we're looking at for on PainX1. Remember, our bullish trade is only if we see a break above this level, retracement, then we go long on that. So that's the only time we're looking forward to place that trade. All right. So after pin, we go to the next one. It's going to be flip X1. All right. Okay. Let's flip X1. So let's zoom it out. Go back to H4. At the bullish, so our bullish trade remains valid so long as we break above this. That's the only time we look forward to a bullish trade. So going to the 15 minutes chart to see what's going on. I will see of structure on the bearish. Okay. Let's go. Let's go with this. All right. So what you're expecting on a bearish, for us to go bearish on this, it's going to be happening only if you can see a break below this high, this blue around here, then we go short. Otherwise, we are looking forward to a good bullish trend. If we can see break above this will be the perfect time for us to actually go long on flip X1. So looking at the comment I said earlier, someone said to check switch, let's switch 600. So let's look at switch 600. Okay, currently bearish. Breaking the previous structure here. I think we're actually seeing bearish opportunity. If we can see this rejection, but let's go to 15 minutes chart to see if that has been confirmed yet. The 15 minutes doesn't want to open, so let's go to 30 minutes. All right, now 30 minutes has opened. So adjusting this to suit the time frame. Now, having that this actually closed bearish, more like unable to break above it. Now, if this market happens to close bearish, so that means let me use this part. After this, if you can see another bearish candlestick closing below this level, then that's when I'll be going short on that. That means if you can see another bearish candle closing below this zone. Now, I'm not saying that maybe I say close below this zone, then I go short on that, of which here these are going short. Stop loss is going to be above this level. Then my take profit is 1:2 weeks to reward ratio. So for the person that actually drop that comment, I can't really remember your name right now. So this is what I'll be doing on switch 600. Though I might not really trade it today because it's not really part of my trade. The ones I actually analyze are the ones I take. But this is my short analysis on switch 600. So the next one is said PainX 600 too. So let's check 600. Okay, go to the H4. So on H4 with this, good. Now having that, the market will be giving us change of structure on the bullish aspect of it. Why did I say so? Now let's say the market start from here to this level. First, remember it broke above this. This is supposed to be a nice zone. Now breaking it below it. Now breaking above this again into this level. Remember it has broken this. Then came down here. Now still breaking above this level. That means we have tendency of breaking above this first. Go short, so go long on that. Let me bring this down. Now, what we were expecting when the market actually break above this level, we test it for us to go long. So this is what I'll be looking at on Trend X 600. So for the persons, these are my analysis, and of course on your Swiss 600, you've already done that on 600, then this is for Trend X 600. Alright, that's done. So that brings us to the end of the analysis with our trade. Remember, no matter how perfect the chart looks, no trade is 100% correct. So always make sure you don't risk more than you can afford to lose. That said, I wish everyone a profitable day trade ahead. Remember to always stay safe, and don't risk more than you can afford to lose.